A long-time Berkshire Hathaway shareholder named David Rolfe, who has a fund, and I think he's got about $10 million worth of Berkshire Hathaway. Anyway, he sold them all out, and he's saying that the Oracle of Omaha, Warren Buffett's been sucking his thumb and has underperformed. And I think he's a bit harsh, to be honest. He says that he complains that Berkshire Hathaway has underperformed the S&P 500 since the March 2009 low. Berkshire Hathaway Class A stock up 323%, while the S&P 500 has gained 334%. That's not much of an underperformance. 323 versus 334. I think that's a bit harsh. I checked it out. That's correct. Those numbers are right. I reckon it's fair to say that Berkshire Hathaway has kind of kept pace with the broad market in the past 10 years. Is that good enough? Well, at least he's kept pace. A lot of stocks, a lot of companies, a lot of investors have underperformed, but obviously a lot of companies have outperformed very, very significantly, including Amazon, which is up 2,000% since then, not in the hundreds, but in the thousands. So obviously you would have been much better off investing in Amazon in March 2009 than Berkshire Hathaway. And I'd say you're right that is going to be true of the next 10 years as well. Now, it's worth bearing this in mind because I actually think there's a lot of similarities between Amazon and Berkshire Hathaway. Obviously, they're slightly different companies in that Berkshire Hathaway is simply an investment company, and Amazon is a retailer. But it's becoming more of an investment business, particularly if you include their cloud web-based web services business, the cloud web services business. But it's mostly a retailer. That's true. But I think Jeff Bezos has a lot of similarities with Warren Buffett, and I just would note this, that Amazon shares are currently $1,700 roughly, and Berkshire Hathaway A shares were $1,700 in 1985, 34 years ago, and they're now $314,000. So since 1985, when Berkshire Hathaway shares hit $1,700, they have produced a compound annual return over those 34 years of 16%, which is quite handy, and that's why they're so well regarded. And they did well up until 1985 as well, obviously. Now, can Amazon go to $300,000 per share from here? Might seem like a lot, but you wouldn't have thought that of Berkshire Hathaway in 1985 either. I mean, if you'd said Berkshire Hathaway is going to be $300,000 per share in 2019, you would have been regarded as being mad. But that's what happened. And I think it's perfectly feasible that Amazon will deliver 15% compound returns. And I don't think it's feasible that Berkshire Hathaway will. So I think fundamentally, Mike, I suppose what I'm saying is you're right. I mean, the other thing to bear in mind, of course, is that Buffett himself is 89 and Charlie Munger, his partner, is 95. So you would think that at some point mortality is going to catch up with these guys, and Berkshire Hathaway is going to change hands. Now, it may be that they've so organised the succession that the next managers of the company will be even better than they are. Who knows? But it'll be hard to be better than them, let's face it. And so I would think that when Warren Buffett actually dies or leaves or whatever he does, Berkshire Hathaway shares will decline at that point. They may recover because the successors who end up taking over, because I do think he's got a succession plan in place, the successors who take over will turn it around and fix it up, and it'll be great. Maybe that's the case, in which case that'll be the time to buy after Warren Buffett dies. But I think fundamentally you're on the right track, Mike.